Let's touch on the retail sales number out in March, and perhaps slightly softer to what most market participants had expected. Easing slightly, coming through at 5.1% from a revised increase of 5.5% year on year in Feb. Is this a disappointing number for you?
No, if I look at these figures, then I still think that the retail sales are doing quite well. And we so often talk about the South African consumer still having a lot of debt, and because of that they can't spend. But at the same time, when we look at some of the figures, then we see that especially in the durable goods that they're still buying. Those sales are still performing quite well, and perhaps that's also a reflection of the fact that those prices, if we look at the retail inflation side, that those prices have still come down.
Yeah, so they're mostly in deflation environments,
yes.
In fact, those durable goods in the country. But with regards to where we headed with retail sales, when you look at the interest rate scenario, it's currently we're sitting at 30-year lows, 5.5%. Yeah. Surely that should have given more of a boost to the retail sales number.
Yeah, but we must remember it's not only interest rates, because we look at the debt levels that
it's disposable income essentially.
Compared to disposable income, then we say, but the ordinary consumer, the average consumer out there must actually still be under pressure. And if we look at the retail sales from last year up till now, they've performed actually quite well, given these circumstances, given the uncertainty. And at the same time, one must perhaps also look at the fact that we sit with a situation where average salary and wage increases are almost double the inflation rate.
Yeah.
So if we look at that, yes, I think that the retail sales are doing quite well. I suppose that one would see a softening of these figures in the months to come. And we must also remember that we'll compare these year-on-year figures with last year. Then, of course, we've seen the recovery, and especially towards the middle of last year, we've seen World Soccer Tournament, which also had a boost for the retail sales.
Absolutely. With regards to the implications for the interest rates cycle, when the Reserve Bank and the Monetary Policy Committee look at retail sales of 5.1%, do you think it would make them shift towards hiking rates, or do you think it would make them hold steady?
I think it will help keep them at the level where we are.
Yeah.
And we look at the inflation rate of, I had it in my mind, 4.2%.
Yeah.
Then if we look at that, and if we think of what the governor told us last week, then it seems to me that we can even look into 2012 with stable interest rates.
Exactly. In fact, yes, 4.2% year on year from 4.1% in March, and most people had expected it to tick up slightly more. What was interesting to note is that we saw a decline in the food inflation number during April. That was the drop in the meat, the price of meat and fish and fruit as well. So do you think that is perhaps setting a new scenario going forward, or do you think perhaps it's just like a once-off?
It can be only a once-off, but at the same time we must remember that yes, the rand is rather volatile at the moment, but given the strength of the rand, we've seen that the large increases that we've seen in the international food prices, that hasn't come through to the South African situation. And therefore I think that we can, the year-on-year figure was 4.8% on food. But then of course we've seen the hike in the petrol price, which has had a larger impact on the overall inflation figure. And if we look at that, we look at energy in general, and let's take Eskom out of the equation, but if we look at just the oil price, that has come down, and that, as you've mentioned, below the $110 per barrel at the moment. Perhaps there can still be a softening of these prices, and especially if we don't go back to the 125.
So let's do what the US does. Let's exclude food and fuel for a minute on the CPI front. Remaining well within the inflation targets at 3.6% year on year, should we pay attention to this number, Ulrich, would you say?
One must always pay attention to the inflation rate, and we must always remember that the focus of the Reserve Bank, also of the South African Reserve Bank, is to contain inflation. And our situation, if we look forward, and we'll think of what the governor told us last week, then, she said to us, yes, there could be a temporary exceeding of the upper limit of 6% in the first quarter of next year. Yeah. And if that's only a temporary exceeding of the upper limit, then one could say, but, actually the Reserve Bank should be quite comfortable looking at the inflation rate in 18 months to 2 years' time. So if we look at that, yes, barring any sort of really upheaval, especially on the international energy prices, I think that if we look at these prices at the moment and the level of the inflation rate, and we look at the performance of the economy in general, we say, you know, actually there is no reason to, you know, change interest rates for 2011, but even in 2012.